So if you've been involved with the stock market for a while, then you know that it takes not only a good understanding of the markets, but of human emotion as well. However, that's kind of easier said than done, especially when you think about work, family, school, and all of the other responsibilities we have. Finding consistent candidates to trade can be extremely challenging. So in this video, I'm going to break down some of the tips and strategies to help you find the next big move, no matter what season of life you're in. Coming right up.
Hey, what's up? Rob here with Wealth Builders HQ, where we bring you the best tips and tools for building your skills to develop wealth for today and well into the future. And on this channel, we do a lot of stock market analysis for long and short term, as well as recaps just like this one. So if you're new here, consider subscribing. Now, one of the questions we get most from our Wealth Builders HQ community is, how do you look at where the stock market has been and determine where it is headed? So we have actually put together an entire free live training workshop that is all about finding the best candidates for today's market. And there's a section for the community, you, to bring your stocks to the event and have me analyze them for you in real time. This free workshop is called Power Hour, and it's taught every Monday live online at noon Eastern Time. I'll leave a link to it below in the show notes.
What an interesting week it has been. The S&P 500 broke through a major resistance level. In the S&P update in just a few moments, we're going to check out exactly how we could potentially trade that and take advantage of and capitalize on that type of move. But first, before we get there, let's go ahead and take a look at the upcoming economic reports. Now, normally I show you economic reports that are only in red, meaning they are highest probability of all of the reports. It seems that the provider has changed some of the structuring on what they consider red, yellow, and orange. So red being high reliability, orange being moderate, and then low reliability or low importance or impact on the market would be the yellow. And what brings me to pause there is the crude oil inventory is not low impact. Not in my opinion. Now, it might be a low impact on the market, but today, and that's because the price has gone down so much. But I don't believe we should discount that report, because as the market starts to climb, that can have a major impact on certain sectors as well as the broader market if prices become too high. So I put all of the reports in there this week of what's coming up. So at least it gives you an opportunity to see what's happening. U.S. home sales, again, I don't believe is a yellow. I think that should be at minimum an orange, and so forth. All right. So there are those. Let's take a look at the earnings reports. Now, remember, we are in the midst of an earnings season. So we've got just a handful of major companies here this week that are announcing on the 22nd through the 25th. Remember, 21st is a holiday. It's MLK. So market is closed. So there's really not a whole lot of companies wanting to announce there because they'll get no bang for their buck at all. It'll be interesting to see how some of the airlines do, like the JetBlues of the world. I mean, you saw how some of the banks have done recently, right, which has been extremely exciting. All right, so let's go take a look at the S&P 500 then, and let's see what the overall market is doing. So we look at the S&P 500. Let me go ahead and clear those yellow and orange lines. There we go. Just gives us a little bit easier view on a picture that is already busy, to say the least. All right, so those yellow and orange bars are ones that we use in power options plays, which I just got done teaching. I think we're up a little over $60,000 this year is our total. Let me see, I've got the numbers here. 68,094 is our total for 2019. So guys, if you haven't gone and check it out, by all means you should. So S&P 500, guys, it broke above that 2690 level, which had a confluence of the 55 EMA, that brown line. Now, what does that mean, confluence? They're near each other. There's two areas of strength sitting right on top of each other. And it's broken every major hurdle right down from the 2573, 2584, 2600, 2627. It's broke them all, and it closed above on Thursday. Friday gapped up and just continued to rock. Friday was a great trading day if you were able to capitalize on some of those moves. So we're looking for the next move up to be about that 2693, 2700-ish level. If it happens to back off, look at the 2727 level. If you look at it for the week, and I know it gets busy when we do it this way, especially on the S&P. If you look for the week, we had a 74-point move up on the S&P. Very nice on the S&P. Weekly, we hit a major resistance, though. So, again, we're not out of the woods just yet, but we definitely are in a better place than we were just a week or two ago. So if we take a look then at our next one is Amazon. Now, Amazon was up 56 points for the week. So these are the movers and shakers, right? 56 points for the week last week. It's bumping its head against ugly, right against that 1700 level. That 1778 is its next resistance on the bigger picture. We'll talk about some short-term stuff. Booking had another good move as well, 94 points. Now, you may look at this and say, Rob, but the pattern isn't great. No, but 94 points in a week, I can find somewhere to take some change out of that. From there, we look at Google. Google had a 42, almost 43-point move. They've got earnings coming up just in a very short period of time, so be cognizant of that. Goldman Sachs is up 25 points. Now, it says redraw fibs on there. This is something that we write on there for ourselves in the power option plays, so we can make sure as a reminder that every time we look at this chart, to look at a new place to draw the Fibonacci's. We're sitting at 202 right now. It looks like 206 and 211. Hard to see, but back here there's another Fibonacci. 206, 211. Those are our two targets on the upside. And then Tesla was the one that was not, and I repeat, not the shining star. Tesla pulled down and closed 45 points down to the penny. $45 down on the week and closed just above the 300 level. Major, major hit. And it weren't earnings that did it. It's, are we going to lay people off? There's woes and wearies about the company. Are they going to continue to build it the way they were and grow and so forth? And a lot of this comes on the heels of them having a very high PE ratio, which already investors should be nervous about. And then to take it to the next level, if they are nervous about it, what's happening? Well, now you're nervous because of a high PE, and then you start announcing bad news, and you just start to see large selling, right? So from a volume standpoint, you can see that we had 24 million shares, and on an average, we have just about 8. And in the last couple of days, let's see, it's a daily. Last couple of days, we had seen volume drop to only, just very, very small numbers. A couple of million shares, 3, 4, 5 million shares. All right, let's go and take a look at some potentials for this week. Just clear those out. Let's go take a look at Amgen. Now, I want to bring us back over to the platform that has, let me get rid of those bars. So this page, this template has moving averages on it, which is what I really wanted to see. So we look at Amgen right now. Let me go ahead and get a little bigger zoom on that. Look at Amgen. They had a great move up. We need to pull back to that 200, 201-ish area and look for that 205 as the next target. Amazon now had a great breakout of the 764 level. Let me bring that one a little bit closer in. All right. So they had a great breakout of that 764 area and a pullback. If we get the continuation down, folks, short term 1667 with the confluence of the ADMA, the purple line, pinkish line, magenta line, whatever color you want to call it, right? CMG got a really nice breakout there. On, let's see, Tuesday, right here it broke out. Wednesday it retested. Thursday it climbed. Friday it pulled back, and it's sitting right at the 8. If you have not taken a trade on this, we're at one of the trade setups that we go through in Monster Market Movers called the zero line breakout trade. So we're looking for, if we get that continuation push to the upside, we're looking for the move up to about 531, which is our Fibit line, that next Fibonacci line right there. And then Netflix, the darling, has been that way for the last month-ish or so. Earnings came out, weren't really what Wall Street was expecting, right? Fears starting to step in on our customers going to cancel. We saw a pullback. They were down $14 on Friday. They gave back most of what they got from their earnings in there. But with that being said, guys, we're sitting right at a major level. There's a confluence with the ADMA there, the exponential moving average, EMA. If we get a bounce here, awesome, we're looking for 354. If we continue to push down, I'd be cautious until you break through the 8 and maybe look at a short-term trade down at 326. All right, ladies and gentlemen, I hope you enjoyed the update here. I hope this was some pretty good stuff for you. We've got a lot of things happening this week in the market, so make sure you keep your eye on it and check us out. All right.
I hope this update was helpful, and I would love to hear your feedback in the comments below. And actually, if you want more insights like this, you could just go over to wealthbuildershq.com. I'll post a link to it below. Now, the question of the day is, what stocks are you going to be looking at for next week? Go ahead and let me know in the comments section below. So thank you for checking out this video. Subscribe and ring the bell if you haven't done so yet. And until next time, Wealth Builders HQ is bringing you the best tips and tools for building sustainable wealth in the stock market. Keep crushing it, and we'll talk soon. Take care, folks.